Hi, good evening, everybody.
Good evening, guys. Welcome to
Good
Busa
evening,
Secret
Mr.
Show.
Lee. Yep, good
Hi.
evening, Mengtik, Andrew.
Hey, good evening, guys.
Hi, everyone. Can everybody hear us? If you all can hear us, please say, hi or hello or okay.
Yeah, I can see Alina say, looking forward. Rashid say, good evening to all. Shafiq, I think they are from your YouTube, is it? Shafiq say, good evening. Yeah.
Yeah, so this session is being
Hi,
streamed
Alina.
across 3 channels.
Mhm.
Yeah, okay. Okay, I think everybody can hear us.
Wow,
Yeah,
a lot
so
of work.
Yeah, I mean, what we have here with us today, Mr. Lee and Andrew from ANCOM, and myself from Stockbit, and Mingtik, of course, from Savui. Yeah, and again, once again, thank you everyone for tuning in tonight with us. Just I guess a short introduction about what I'm doing, and then I'll pass it on to Mingtek before we pass it on to Mr. Lee and Andrew for the presentation. So, firstly, I am from Stockbit. Stockbit is actually a social networking platform for stock investors. We have an app, a platform, right? So you can actually easily download our app or go to www.stockbit.com. So what Stockbit is doing is actually we are a social networking platform for stock investors. It's a place where you can get information with regards to any stocks in Bursa Malaysia. It's a place where you can also discuss and learn about the Malaysian stock market from one another. So we are currently having a very good and healthy growing community. So just check us out, and hopefully we can see all of you over there. Yeah, Mingtek, your turn.
Hi, everyone. My name is Meng Teck. I think those that are tuning in from Savvy already know who am I. But if you're from Stockbit, I'm one of the blogger that write about stocks, and very looking forward to this session. In fact, the other day, last year, I attended the briefing by ANCOM, and this is one of my biggest regret, which is not investing in this company early enough. So here I am to see whether it's still early or is it too late, Adi? So looking forward to this session, guys.
Yeah, so maybe we pass the floor to Andrew and Mr. Lee. Without further ado, let's start the presentation.
Okay, let me
Hi,
just
Andrew.
share, let me just share my screen and just let me know if it's okay.
Yep.
Okay, because I
Okay.
can't really see myself from now on. So any feedback, please let me know.
Yeah, you guys are on.
Okay, thank you, Mingtik and Rondi, for hosting tonight. And to all viewers out there, thank you for tuning in. Instead of watching Korean dramas or Netflix movies after your dinner, you decided to tune in to learn more about ANCOM. So thank you very much. So allow me to introduce ANCOM to everyone. Now, what does ANCOM do? Now, a lot of people know us as a chemical company, but let me share a little bit more with you guys. Now, ANCOM manufactures agrochemical products, and we sell them worldwide to more than 40 countries. And why do growers across the globe seek our products year after year? That's because our products perform a very crucial function in the plantation field. Now imagine yourself driving along a Malaysian highway, passing by rows and rows of palm oil trees. Now those palm oil trees are what we call as crops. And crops are what we intentionally grow. They're what we deliberately invest in to harvest, so that we can harvest the fruit to sell for money. Now for growers, this would mean, selling crude palm oil, for instance. Now, on the same piece of land, apart from the crops, there are also unwanted plants growing around them. Now, these plants take up the same food source as the crops. So imagine yourself as a plantation owner investing in fertilizer, food for your crops, for your babies, and you have all these weeds, unwanted weeds proliferating around. Now, what do? You'll have to get rid of the weeds. And to get rid of the weeds, you'll need a class or category of products called herbicides. Now, this is exactly what our products do. Our products target the weeds so that we can kill the weeds and the growers can grow the crops as best as possible. Now, this is what our products do. Generally, we have herbicides, insecticides, pesticides, etc. Now, all these is a total solutions for growers worldwide. Now, in our company, we have a tagline called "We are all customers of ANCOM." Now, why do we say so? That's because the crops that we serve are mainly palm oil, sugarcane, and cotton. And these three are amongst the most basic and important commodity that you and I consume on a daily basis. For one, we are wearing cotton clothes. We need oil to do our cooking, to do chao kway teow, for example, and we need sugar to make teh tarik or even Coca-Cola. So we have a joke in our company. So you have to think of ANCOM daily, morning, afternoon, and night. In the morning when you have your teh tarik, you think of ANCOM because you're having sugar. And lunchtime, you're having chao kway teow, you think of ANCOM. And when you go back home at night, you take off your cotton shirt for shower, you think of ANCOM again. So ANCOM manufactures agrochemical products, and we play a very special place in the whole food security supply chain, where we provide solutions to growers worldwide to solve their weed problems. Let me just move the slides. Now, in the universe of agrochemical producers, there are thousands and thousands of manufacturers, but only a handful of active ingredients manufacturer. Now, allow me to clarify a little bit more on this active ingredients part. Now, when we refer to active ingredients, or in short AI, active ingredients are the compounds in the product that gives it its unique properties. For example, whenever we're having a headache, we would take a Panadol pill. So the compound in the Panadol pill that makes it work, that makes it effective, is actually paracetamol. And it constitutes just a tiny bit of the product in terms of percentage. So same goes for our agrochemicals. We are a active ingredient producer, while the rest are called formulators. Of course, we do formulation as well, but in terms of producing active ingredients, because it requires a higher level of capability, a higher level of expertise and know-how, we're able to command higher margins compared to just purely formulating products. Just another analogy, formulating products would be akin to mixing drinks in the bar, mix and match. But making the AI is like, producing whiskey. So it is a different aspect in the whole production process. Now, in ANCOM, we are very proud to be the only AI manufacturer, not just in Malaysia, but also in Southeast Asia. So this is one of the very few achievements that we are very proud of. Now, apart from agrochemicals, within ANCOM Group, we are also one of the only two manufacturers of ethanol in Malaysia. So I think we're the second largest ethanol manufacturer in Malaysia after Hexa. So the whole group we have a 50-year track record because the key subsidiary, which is the agrochemical subsidiary called ANCOM Crop Care, it is actually started in 1969, more than 50 years ago. So as I've mentioned before, agrochemicals would be our key division, which is the subsidiary giving the highest profit contribution to the overall ANCOM Group. Now, our products, apart from producing active ingredients, were formulated into herbicides, insecticides, fungicides, as well as timber preservatives. Now, timber preservatives are used to enhance and preserve wood used in the shipping industry, or even laying the rail tracks to prevent fungus and termite attacks. Now, for ANCOM, we also own and control another listed company called Nilex Berhad. Now, for Nilex, they are also a manufacturer of industrial chemicals such as ethanol, phosphoric acid, adhesives and sealant, as well as for the trading division, they are one of the largest distributors of methanol in the region. Now, of course, another smaller subsidiary within the whole ANCOM Group would be ANCOM Logistics Berhad. Of course, we have some of our logistics assets parked under ALB, but as you all know, ALB is undergoing a asset sale with Nilex, and it is also undergoing a reverse takeover process with a target company called S5 Systems. Now, coming back to agrochemicals, apart from being an active ingredients manufacturer, we are also very proud of our products being able to export to more than 40 countries worldwide. Now, we are an export-oriented agrochem player where more than 2/3 of our products, around 65 to 70%, is exported worldwide. And what enables us to export worldwide is not only our product quality or our consistency in delivery, but also because of this thing called a registration. Now, unlike other industry, for example, FMCG or a food industry, where you can push your product from lab to sales within a short span of time. For example, if you're a manufacturer of biscuits, if you have a new flavor, you can push it out to the market in maybe 1 or 2 weeks or a month or so. But for agrochemicals, because our products are essentially poisonous products used around crops that are actually food source, it is heavily and strictly regulated by the respective authorities in each country. Now, in Malaysia, our products, our pesticides, are regulated under the Ministry of Agriculture, and each product registration would take roughly around a year and a half, if we are lucky, to an average of a 2-year time frame. So it is a very long and tedious process from lab, to field, to be able to sell them commercially. We have to go through a lot of data collection, a lot of field tests, lab tests, until we've satisfied the paperwork. Only then we have the necessary registrations to sell. Of course, this would mean that the whole industry is a very protected industry in a sense, where the entry of the barrier entry is pretty high and pretty tough. It's not just about money, but also the time needed to accumulate the necessary registrations. It's just like having a passport where you can enter different countries. So our products, we are registered in more than 40 countries, and this is an accumulation of hard work over 50 years. I think not many company or not many agrochemical company can say the same way as we do. Apart from manufacturing active ingredients, we have integrated value chain where we synthesize active ingredients. We also formulate them into end products under our own brand name, as well as OEM for other manufacturers. And we also do some trading and distribution. Now, to give everyone a little bit of a flavor of our products, now the 2 main products that we sell are actually MSMA and Diaron, as you can see on the screen. Now, for MSMA, we have more than 50% of a global market share, and we are one of the only 2 producers worldwide. And for Diaron, we are one of the only 7 Diaron producers worldwide. So, as you can see, the products that we are in are very specific. It is very niche. MSMA, this is a little bit more technical. MSMA is a post-emergent contact herbicides that is appropriate for palm oil trees in the nursery stage. Now, MSMA is post-emergent contact, and Diaron is a pre-emergent systemic. Now, we don't have to really know too much about this, but one refers to killing the weeds at the leaves. Diaron will kill the weeds at the root stage. So top and bottom, both also we can whack and kill the weeds effectively. That is about providing a total solutions to the plantations. Now, apart from sugarcane, cotton, and palm oil, our product portfolio caters to a wide variety of other crops as well. For example, cereal, pineapple, corn, citrus, cocoa, coffee, and turf, etc. Now, our products portfolio, as shown on the screen, MSMA and Diaron will constitute the 2 main products. 2,4-D glyphosate Monex are our other products, and of course, Monex is a mixture of the first 2, MSMA and Diaron. This is what we call as a cocktail products. As the name suggests, cocktail refers to mixing. So we are the only one in the world doing this specific mixture, this cocktail, and it is our signature product. And yes, we name it to sound a little bit more like money. It's one of the highest profit generator for ANCOM. Now, we manufacture out of 2 locations, one in Shah Alam and one in Klang. The capacity for Shah Alam is about 30,000 metric tons. For Klang, is about 12,000 metric tons. Now, the utilization rate is at 70% and 50% respectively. Of course, on the same piece of land in Klang, we are undergoing an expansion where we are building 3 new production lines to cater for 3 to 4 new active ingredients going forward. Now, throughout the 50-year history of ANCOM, we've relied on 4 main active ingredients, and it has carried us, so far for 50 years. But to grow in the next stage, to grow exponentially, and to continue the amazing growth momentum that we've experienced for the past few years, we are undergoing this expansion, and it is expected to start contributing commercially starting next calendar year. So the world map here and the list of countries just illustrates the number of countries that we are in. The countries in red, we are registering for our new products. Just to give you an example of how challenging or how much challenge that we have to overcome to get into all these international markets. As I've mentioned before, for the Malaysian market, we require around 2 years of registration to be able to sell our products. But the longest that we have faced is actually in Brazil. Our lab, our people have spent a total of 7 years registering, going back and forth Brazil, replying to tons of emails, before we were able to sell our products into Brazil. And it has paid off handsomely because, since starting our business in Brazil in mid-2000s, Brazil has grown to become our number 1 export market out of Malaysia. It contributes around 13 to 15% of our annual revenue. That's because our products are especially suited for sugarcane. Now, as you know, Brazil is the largest sugarcane producer in the world, and we are very lucky. We are very proud that we are, I think, the only Malaysian agrochemical company to have a presence in Brazil and United States, 2 of the largest agriculture markets in the world. Now, for our revenue breakdown, as you can see, Malaysia is still our number 1 market, where we provide agrochemicals to palm oil plantations. Brazil is our 2nd largest market. For the United States, we are catering for their cotton market, for the cotton growers. And in Australia and New Zealand, this is where our timber preservatives market are, and as well as some ASEAN market. Now, in terms of the product breakdown, as I've mentioned before, MSMA and Diaron constitute majority of our revenue and profit. Now, you can see here this pest control, time to do a little bit of advertisement. We have a unit under ANCOM called Pest. This pest control unit we've acquired since 2 years ago, and it is the unit responsible for providing sanitisers and sanitising services, and business has been booming since the pandemic because of this new requirement for sanitising spaces. So if you happen to pass by Watson's or any other supermarket, if you happen to bump into a sanitizer with the label N-Guard, this is from us. On the left, the green one is the non-alcohol version. The regular alcohol version would be the blue one, the one in blue. Now, for our agrochem market, the customers would mainly consist of growers, such as the logos that most of us would be familiar with. On the bottom, we have Sime Darby, FGV, IOI, KLK. These are the plantation big boys in Malaysia. But for overseas market, the list of clients for ANCOM is pretty impressive. For example, the top left one, UPL. UPL is our customer for Brazil. It is a company listed in India with a market cap of, I think, 26 billion ringgit, United Phosphates Limited. And on the far right, Lonza is a Swiss listed company, 200 billion ringgit market cap. So we are very proud of our list of clients because, to comply with the requirements of products from all these multinational companies, we demonstrate, or ANCOM has been able to demonstrate our consistent delivery and supplying quality products to the top agrochemical companies in the world. Of course, this is the management of ANCOM Crop Care. We have our Group CEO, Mr. Lee, also helming ANCOM Crop Care, the subsidiary in charge of agrochemical products. And of course, we have a new addition to our company last year. We've grown organically throughout the years to where we are today. And last year, we appointed a new director, Mr. Wong, on the right. He was previously the investment director of Navis Capital Partners. He brings with him a wealth of experiences for deals that he's made throughout Southeast Asia. So we are very excited going forward, apart from the new active ingredients that we are embarking on at our Port Klang site. We're also looking at a lot of M&A opportunities, and we'll consider them if there is any. Now, the second segment of ANCOM, apart from agrochemicals, will be industrial chemicals. As I've said before, we own and control Nylex, another listed company in Malaysia. Now, for the manufacturing side, we have ethanol, phosphoric acids, and sealants. Now, of course, time wouldn't allow me to get into too specifics, but what we are trying to do with Nylex is that if you have studied us for the past 2 years, ANCOM was indeed loss-making for the past 2 years. It was because of a downturn in the oil prices, where the trading division of Nylex, being one of the largest distributor of methanol, which is a petroleum-derived product. Now, on the downtrend, as a trader and distributor, Nylex was having a challenging time. But of course, given the reversal in the oil prices, as well as the uptake in petroleum products demand with economic recovery, we are slowly seeing Nylex turning around going forward. And of course, with the growth in agrochemical as the most profitable division, if we are able to contain the losses on Nylex side, coupled with a profitable agrochemical division, we are very optimistic of our coming few financial years, where we are able to deliver what we've always been telling investors. Of course, this is okay. On the ethanol side, we are running at 6 million liters capacity, running at full speed because of this new demand on alcohol, given the pandemic situation. And we have applied successfully for an expansion plan up to 10 million liters, and we are currently undergoing the pre-construction phase for this ethanol. Now, logistics would mainly be ANCOM Logistics. The assets under ALB is not very large in the context of the whole group, so we would not spend too much time on this. I would then pass the floor to my Group CEO to explain more about how he sees ANCOM going forward, how he plans to steer the company into profitable years, putting all the losses behind us. And I hope what I've shared has enabled everyone to have a little bit more understanding on ANCOM and our agrochemical division, because a lot of investors' perception on ANCOM is that we are an industrial company or we are a chemical company. But of course, in the universe of chemicals, there are so many types of chemicals, and what we're doing is very specific. We provide solutions in the food security supply chain. We solve the weed problems for growers, not just in Malaysia, but worldwide, for palm oil, sugarcane, and cotton. And this is the gist of ANCOM Berhad. Thank you for listening, and I would like to pass the floor back to my CEO.
Thank you, Andrew, for the concise and clear presentation about the group. Now, Mingte and Rondi, I realized that the YouTube version, I think the slides comes out about 30 seconds. Is that right? Rondi, we can't hear you, Rondi.
Rondi, you are muted.
Andrew, go to the page on the first page.
Yeah, normally there is a small lag between our StreamYard against the live. Yeah.
Andrew, one slide before.
Okay.
Okay, I think there's a 30 seconds. So basically, while waiting for the page to come in, I'll explain a little bit about the group a bit further. So going forward, essentially we are a chemical company. We are involved. Sorry, there's a bit of echo. See. All right. So essentially, we are a chemical company involved in the agri-chemicals products and also the industrial chemical products. So here we have a one page to explain about the growth catalyst going forward. A lot of people are asking, going forward, what are the key reasons for the growth for the company in the coming years or coming 2 years or so. So this page essentially summarizes the key growth factors going forward. Here we have the first part is basically the new product, O1. And second, the expansion plans we're going to talk a little bit about. And also third, the macro recovery, mostly for the industrial chemical sector. So on the right side, basically new AI, as Andrew mentioned, currently we're involved in about 4 active ingredients in Malaysia. And in Southeast Asia, we are the only active ingredient producer for herbicide-related products. And also in Indonesia, we have one small pesticide active ingredient producer. So in the entire Southeast Asia, there are only 2 companies involved in the synthesizing of the active ingredient. That makes ANCOM very special compared to a lot of other industrial players. In the region, most of the players are formulators instead of the synthesizer of the molecules. Here, going forward in the next few pages, I think I'm going to explain a little bit about the new AIs, new active ingredient that we're going to embark on in the next 2 years. Second part, basically the capacity expansion. So for agri-chemical products, the new AI requires new capacity and new factories to house our facilities and house our production. So going forward, we're going to expand the capacity for the agri-chemical division. And later we got one page to show the expansion plans. And also for the industrial chemical division, we will have expansion on the ethanol production under NILEX. So currently we're producing about 6 million liters, and going forward, we hope to be able to produce about 10 million liters a year. And the last part is basically the expected recovery in the global economy. As you may have realized, a lot of commodity prices are on the rise. The petrochemical prices are also on the rise. Diesel, the petrol, already, I think the crude oil prices has already increased to maybe about 70 USD at the moment. So going forward, our industrial chemical division is very much positively correlated with the petrochemical industry and also the industrial chemical. Now, next page, we're going to talk a little bit about that. All right. If you take a look at this, Bloomberg, the global food prices are at 6-year high and are set to keep on climbing. If you take a look at the graphical depiction here, 2015 we are at the low, but prior to that it was coming down, and now we are at the all-time high for the past 6 years. So as you maybe realize, a lot of commodities are on the high cycle at the moment. In the last 2 years, we were talking about NILEX, especially the industrial chemical product is on the low cycle, but at the moment, everything else is on the high. So next page, especially relevant to us, next page, we would have the prices of the sugar. Now, everybody consumes sugar. Now, I try to reduce the intake of sugar because I want to lose some weight. But sugar is a commodity, it's a staple food that everybody will require on a daily basis. If you take a look at this graph, from 2017, actually it was on the way down to 2020. In the last 1 year, we are now reaching 17 cents per pound for the sugar. Now, sugar price is on the rise, and not only sugar price, the animal feed and a lot of other commodities, especially industrial chemicals like methanol, they are all on the rise. So how is it relevant to us in the sense? Now, for sugar, as Andrew's presentation shows that we sell a lot to the sugarcane plantation worldwide, especially in Brazil, Africa, and also Australia. So high sugar prices will translate into higher purchasing power from the customers. So with the high sugar prices, generally we can expect farmers will spend more money on the fertilizer and also on the pesticide. So this trend is definitely a good trend for agrochemical division per se. All right, so that's relevant on this page. Now, next, I'm going to talk a little bit about our agrochemical division in terms of the regional growth. Now, as Andrew mentioned, when you wake up, the moment you wake up to the moment you sleep, actually we consume sugar and we also use a lot of cotton. So our food supply basically is a key catalyst for our business and revenues. Now, with the increasing population and also land scarcity, there will always be growing importance of the reliable supply for the main crops. Hence, there is a rising demand for good quality pesticides. So our involvement in the food chain industry is through the administration of the poisonous or the poisons and of the pesticide to help the main crop to get away all the weeds, so that nobody is fighting. All these weeds will not be fighting for the same nutrients for the main crops. As you can see here, population worldwide since 20, 30 years ago is ever rising. With the rising population, there will be rising demand for the food. With the rising demand for the food, there will always be rising demand for fertilizer and also for pesticide. So from food security perspective, ANCOM's business will continue to grow going forward. Now, secondly, diversification from China. Now, the biggest active ingredient producer are always China and India, because China has got a huge network of the chemical production. So I think worldwide, in terms of the active ingredient for chemical industry, I think 60-70% comes from China. So for the last 20 years, there has been a lot of dependence on the active ingredient coming from China. For herbicide and pesticide, all the products are using the raw material from China. But however, for the last few years, 3 to 4 years at least, there has been a lot of issues on the supply of active ingredient and the intermediate chemicals from China. It is due to the changes in policy or due to certain sizable accident in terms of the plant explosion, or due to other maybe viruses and all that. So the supply from China has not been very consistent for the past few years. For example, I think 2 to 3 years ago, along the Yangtze River, all the chemical plants within the 1 kilometer radius distance from the river must be relocated. That's why there was a huge disruption of the chemical supply from China. Resulting from that, many customers has come to us to ask if we are able to synthesize certain molecules, certain active ingredient for them, in order to reduce the dependence on China. For the last few years, policy changes, and also, for example, I think in 2018, there was a huge explosion that took place in Jiangsu province. As a result of the explosion of one of the plants, I think about 120 people disappeared and some evaporated. It was a huge explosion. Resulting from that, there was a 4 months the interruption of supply for certain chemicals. So realizing that, a lot of customers wanting to diversify their sources of supply, not depending on China, and hence they come to Southeast Asia or Indonesia. They are limited, very limited corporation that does this molecule or active ingredient synthesizing. So we, ANCOM, poised to benefit from being the sole producer of the herbicide active ingredient in Southeast Asia. So this is one very important aspect going forward. And that's the reason why we wanted to focus on our core competency to really focus doing the AI going forward. So we are going to increase from 4 to 8 active ingredient going forward. All right. Next slide, please. Now, we target to double the number of AIs from 4 to 8, as mentioned here. So currently, we are building a new 70,000 square feet facility on the land adjacent to our existing facility in Portland. Now, on the darker part, basically shaded part, is basically our existing formulation plants. As you can see here, the blue line, the 3 boxes depicted in the blue line, is basically our new factories for the new active ingredient to be produced for the next 2 years going forward. As you can see here, 70,000 square feet split into 3 distinctive factory space. Now, our products are very sensitive to the plantation sector. There cannot be any cross-contamination of the active ingredient between one another. Cross-contamination will cause a lot of trouble to the plantation administration in the sugarcane farm, as well as the cotton or palm oil industry in Malaysia. So for every active ingredient, we need to house them and put them into one specific space. So for this new additional capacity, we are going to about to increase about 4,000 metric ton of new active ingredient to be sold to our customers. And we expect the construction to complete by third quarter, if not the fourth quarter, because during this pandemic, we've got huge issues getting the development order. I think we just recently got the development order approved, and also in terms of the production, in terms of the factory factory building, I think we're facing a bit of challenges during this pandemic period. At the same time, for all this design, for the installation of all the equipments, we are waiting for some Chinese engineer to come in. At the moment, traveling overseas and inviting Chinese engineer to come here is a bit of an issue. But nevertheless, we will work hard. We will continue to press to complete it by third quarter, if not fourth quarter. And we hope to be able to commence operation by fourth quarter, if not the first quarter 2022. All right, next page. Now, just to give you a little bit feel on the new AIs that we produce. Now, we put the active ingredient by the capital letter. Due to the confidentiality of the requirement with the customers, we are not divulging any information relating to this, but we put a capital letter to represent the product. So B, E, T, C, and S. Basically, for example, for B, it is used in pineapple and non-crop usage in Japan, mostly in Japan and a bit in US and Mexico and Indonesia for the pineapples. So the market size is about 1,005. I think this year, maybe increased to 2,000. So we are targeting to maybe capture about 300 to 400 metric ton in the second half of this year or in the first half of next year. Sales potential is about 20 million. Now, targeted GP here, or we put 15%. Generally, our existing product commands the GP margin of approximately 30 to 40%. Now, these are new molecules that we are about to produce. Usually, there's a learning curve for conservative reasons. We are looking at 15% for the initial year of production. Until we achieve the economies of scales, I think we may be expecting 25 to 30% for the new product. So we target to roll out in third quarter, which is about 3 months from now. So I think we are able to produce this product because we started about 2 years ago. The second one, E, for Australia, specifically for Australian market, technical is about 4,000. So we target to produce the technical. Now for E, they are only limited, I think about 3 to 4 producer in the world. So basically for this also, we target to roll out third to fourth quarter this year. Now T is a bigger value product used hugely in Brazil, South Africa, and Australia. It's basically for the herbicide also. So we plan to produce about 1,000 metric ton, and the potential sales resulting from the 1,000 metric ton is about 64 million. So 15%. In the longer term, about 25 to 30%, right? So there will be another 2 products coming soon. I think we will talk about it in future. All right. So this will give you a bit of feel of the product that we produce. We soon going to produce in moving forward. All right. So next, all right. This page, if you have time, you read the reading here. But basically, the next page, I'm going to talk a little bit about the financial. Now, as a group, we produce, I think in terms of revenue, we achieve about 1.5 to 1.9 billion ringgit Malaysia. So that sounds like a big number. So in terms of the contribution by the different segment within the group, I think we put it simply, we simplify it into this diagram to show that the contribution of PAT by different segment within the group. As you can see here, historically, for the past 6 years, the highest contribution of profitability to the group is through the Agrichem division. It's the division that Andrew has just presented to you. So 35 million being the highest in 2019. 2020, there was a dip down to 25 million PAT. It's still attributable to the natural disaster that took place in 2020. 2020, we have got a flood in US. We also got a bushfire in Australia, if you can still remember. There was a huge bushfire that took about 3 to 4 months. So every time when there's a natural disaster, the agrichemical division will be affected, because whenever there's a natural disaster, they will be lesser dependent on the pesticide and also on the fertilizer, because the main crop will be killed by the natural disaster. So this year, I think for the first 6 months on the on the quarterly result, we already announced better result for the agrichemical if you take a look at our segmental reporting in the quarterly report. The second part, in terms of the profitability contribution, comes from the Nilex group. As you can see, the orange color. Now, as you can see here, NILEX for the past 2 years experienced a loss after tax of 4.5 and also 20.3, the orange line. This is in line with the low cycle experience in the industrial chemical division. All other businesses are also similarly affected. But for the first 6 months, if you take a look at NILEX and also ANCOM's result, you will see a bit of recovery of NILEX. And going forward, as we show you the rising commodity prices, with that in place, we hope the industrial chemical division, the trading part of NILEX, will recover very, very soon. Now, ALB, ANCOM Logistic Berhad, actually is involved in the chemical tanking and also transportation of the chemical bio liquid. We've got about 100 ISO tankers. We also have about, this tank farm amounting to about 44,000 cubic meters. So all these businesses are there to support our chemical group as a whole. It's housed under ANCOM Logistic. As you can see here, the profitability is not significant. Hence, that's why there was an announcement earlier to transfer the business to NILEX Group. I think you can refer to the announcement to understand this bit further. Now, 2 other factors that will change a lot going forward will be the red line. Now, red line basically shows our profitability from the media group. As you are aware, media group now is experiencing very challenging time. Whenever there's a pandemic or there is a downturn of economy, most people will cut back the ADEX advertising expenditure. Now, 2018, about 2 years ago, the group has decided to focus on our core business of chemical involving agrichemical and also the industrial chemical going forward. Hence, we have disposed of majority stake of the media business to our partner in VGI in Thailand. They are quite a big company. Market cap is about 10 billion ringgit. They are the regional player. So we have relinquished our majority stake for them to turn around the group. So at the moment, we are minority stake. And going forward, the contribution from the media group will be minimal. And the last part is essentially the corporate cost. As you can see here, the corporate cost is on the reducing trend from 20 over million to the current level of 13 million. And going forward, we'll continue to reduce the corporate cost. As a result of this corporate cost reduction, I think going forward, most of this profitability can surface, can contribute back to the shareholders. Now, the reduction of this corporate cost from 2017 to 2020 is mostly attributable to the reduction of the debt at ANCOM Berhad level, the corporate debt. So all this debt was incurred in the past in financing some of the businesses, loss-making business. So going forward, we are very focused in the debt reduction program, in enhancing the profitable business, and also to stop the loss-making business. All right, next page. All right, a little bit about the first quarter and second quarter result that we announced a few months ago. This page basically we want to show you that since last year, 2018, 19, and 20, the last 3 years, especially 2020, the PATAMI of ANCOM Berhad was 9.7 million loss. All right, the loss was contributed mostly on the last quarter, where we have got some write-down in the industrial chemical divisions, goodwill and all that. But for the first quarter and second quarter, we are on the recovery trend, 3 million and 6 million. And overall, the margin has improved, and we are about to announce our third quarter result, and hopefully is on the rising trend. All right, and next page basically shows a little bit about our determination in terms of debt reduction. Now, this page to show you the last line, basically the net gearing. From 2018, it was 0.79 times, and 2021 second quarter, we are already at 0.56 times net gearing. So basically, there is a reduction of the borrowing at a group level. Basically is attributable to our effort to make sure that our debt level is not too high going forward, and hence with the reduction of debt, we will have lesser interest cost going forward, hence the lower corporate cost. So basically, I hope this a little bit talking about the strategy and catalyst going forward, and also a little bit showing of our financial through the graphical division will give you a bit of idea of our group. So with this, I hand over back to Rondi and also Ming Teck. Thank you very much. Yeah.
Thank you, Mr. Lee, for the wonderful session, and also Andrew. I like the presentation a lot. You answered a lot of the questions that people have in their mind. But we also have some questions from the floor that I think is quite interesting. So we'll go segment by segment. So we'll start from the crop care business first. So maybe Rondi, you have some questions first. Maybe you can shoot it first. Rondi, you are muted.
Sorry. Okay, so yeah, I mean, Mr. Lee and Andrew, very good presentation. Thanks for letting us into your business and understanding better about your business. I think some of the questions that I have and seeing some of the questions from the floor, just to apologize in advance, you might maybe need to kind of like repeat some of the things that you mentioned earlier. Yeah, but I think the first question I would like to start with this. I think I have a similar question as well. Like over here, Michael is asking that due to the kind of like agricultural commodity super cycle that you mentioned earlier, CPO is at 13-year high, corn is at 8-year high, soybean is at 7-year high, and sugar is at 5-year high, coffee is at 5-year high. How has your average selling price been? Has it been trending up? And if yes, how big is your profit margin now? And how would it change in the future if you decide to increase your product price? I guess Michael is asking here about your average selling price right now on the commodity super cycle, as well as the improvement in margin.
Okay, thank you for the questions. Yes, everything is on the high, all-time high for the last few years. Here, definitely the average selling price will be increasing along the way because with the high prices, I think customers are able to buy more, able to buy at higher prices. Now, the high prices is also driven by the higher cost. A lot of people focus on the revenue side. People don't talk about the cost side. The cost side is also important. Now, a lot of material, especially the raw material, the chemical intermediate from China has also rise to the all-time high. So correspondingly, we are able to increase the average selling price. At the same time, we are also facing the cost increase in terms of raw material from China. But all in all, we are expecting generally the margin should be on the upward trending because not everything get to pass back, not all the costs get to pass. The costs get to pass back to customers. Generally, when customers are having the good run, their ability to buy more product is there and to absorb higher prices is there. So we hope we are able to capitalize from this trend. Just bear in mind that it's not only the revenue side, the cost side has also increased, something for us to manage going forward. But generally, we are excited about the high trending of the world commodity prices. Thank you.
Sorry, just one more question before I pass on to Ming Teck. Can I just also roughly understand, Mr. Lee, right? In terms of your products, which is the biggest source of revenue by crop? Is it sugarcane? Is it coffee? Or is it CPO? Like what's the percentage like?
Okay, for all the active ingredient that we sell, the biggest crop that we are selling, serving the plantation sector is the sugarcane. So for all the sugarcane farm in the world, we are supplying the product to them because, for example, our main product, MSMA, there are only two producers in the world. One is in Israel and the other one in Malaysia here. So I think we share the market quite equally for these two products. And for the new entrant to come to this product is quite impossible due to the lengthy registration requirement. That is used to serve the sugarcane industry. And second product, Diron, is also used to serve the sugarcane industry. So with these two products, I think it constitutes maybe 45% of our total revenue. So sugarcane is about 45% of our total revenue. And interestingly, going forward, when we decide on the new active ingredient to be produced, it is also there to serve the sugarcane market. It's because of the infrastructure that we already developed over the years. All the distributors who come forward to us to ask us to produce the active ingredient comes from the sugarcane industry. So going forward, there will be more dependence on the sugarcane industry, but also at the same time with some of the new active ingredient, we are about to go into soybean also because soybean is the biggest crop in the world. Now, the other two that we are serving is basically the cotton and also the palm oil. The second largest is palm oil. We have one or two products that's serving the oil palm market, and we are the only producer in the world. So I think that maybe takes about 20% of the revenue, and cotton maybe approximately about 10% of the revenue. So our active ingredient serves 70%. These three main crop will constitute 70% of our revenue source. So basically, that is a bit of background on the three crops that we are involved in. Yeah.
Okay, noted. Thank you.
Yeah.
Mr. Lee, a side question a little bit, but it's on commodity.
Yeah.
Wondering what's your view on the soybean price going up, sugar price going up, all the commodity price going up? What is the reason for this from your view, and do you think this is sustainable? Because I see almost all the commodity price going up.
Well, there are a lot of school of thoughts. All these questions, I think maybe economists will be able to answer better. But I'll tell you this, share on the sugarcane part. The reason for the sugarcane price increase is attributable to the pandemic. Now, India is also a very important sugarcane producer. Now, due to the pandemic, we all know India is experiencing very bad pandemic situation. The sugarcane production in India is badly affected. As a result of that, there's lesser supply of sugar. Resulting from that, I think for the last 1 year, you see the sugar price keep going up because there are lesser sugar to be produced from all the plantation. Now, India is a big plantation supplier for sugar. So for that reason, I think sugar price came out. Now, the increase of a lot of commodities are also attributable to the rising petrochemical prices. Now, petrochemical prices are the derivative and also the raw material for a lot of industrial chemical product. So when the crude oil prices are on the rise, generally you will see a lot of raw material on the rise as well, in tandem with the rise of the crude oil, and also for transportation costs. For the last few months, the transportation cost has gone crazy. All industries experiencing the highest freight cost worldwide. Is attributable also to the pandemic. Many containers go overseas, they cannot come back, all stuck in Europe because of the pandemic, lesser people working. So but of course, the key here is to your question is, with a high commodity prices, is it sustainable? It is attributable technically to the shortage in supply, and also attributable to the high oil prices, generally speaking. Now, sustainability, I think there are a lot of school of thoughts. Anything that goes too high is not sustainable, right? Because then the negative economic skills will set in. We are talking about the balance rise. So anything that's too high, certain players will be affected. Not everything can be passed back to customer. So at the moment, it is still rising at the acceptable level. If it goes another 20-30% in terms of sugar prices, that will actually cause this equilibrium to the markets. So generally, I think at the current level, it's sustainable. But going forward, we still got to see how it goes. Otherwise, a lot of industry will get affected. Too low is not good. Too high is also not good. So that's how it is. Yeah.
Thank you, Mr. Lee. I like this answer. I've heard another business also say their raw material price going up also because of the logistic. So I think this freight is a really big factor, and that could be the one.
Just give you a bit of feel of the logistic. For example, we send the cargo to Brazil, for example, to Santos, in Santos. So last time to send one container, 20-footer container, is about 2002 to 2007 USD per container. I think since December, January, it has shot out to 9,000 USD per container. So 400% increase in the container. So in the freight cost to Brazil. So all these are actually challenges faced not only by us, by a lot of players in this region. It is because there are lesser ships going around because of the supply interruption, and also a lot of containers, not enough containers, are all stuck in overseas. They cannot come back because of lesser people working at the port. So actually, if you realize, a lot of stock, logistic related stock has gone out because of this reason for the past few months, because it's crazy, it's at an all-time high. Yeah.
Okay, so and this cost is factored into the price of, let's say, if I buy sugarcane, then they already factor that in.
Well, generally, when the price of logistics goes up, a long-term win-win solution would be to share together with the customers. And at the end of the day, we see we always try to find a way to pass it to the customers. But if customer cannot pass it to the farmers, then it's a bit difficult. The other reason to consider is also whether the competitors are having the same logistical cost, right? Luckily, this logistic cost is affecting everybody in the world, right? Everyone. So I think everyone is facing the same problem. So hence, it is a universal problem, not only a problem applicable to us only. So that's a good thing. Yeah.
Okay, so like you said just now, the revenue increased, but the cost also increased, but the profit margin remains the same, right?
Well, generally speaking, usually when the prices increase, we sell AVP going upward, we try to maybe conserve a bit more profit with the product if it is possible. But generally, when customers are able to buy more, then not only the prices is in play, I think the volume is also an important factor. So we always hope that the customers can buy further and with the higher prices, always the case. When you see the soybean, the corn, the sugarcane with the prices is higher, generally customers are able to buy better fertilizer, and also more pesticide. So there are two parts. One is the selling price, the other one is the volume. So when the prices are low, uh, farmers has got lesser money to spend on the product. So that's a general trade trend that we observe in the market. Yeah.
So has that already been factored in the Q2 earning, or that hasn't been factored in the result yet? It has.
I think I would say that partially it is there already because it's on the rise along the way. I would say partially it's there already. Q2, we're talking about 2 months ago, and revenue is a price that we entered into end last year. So along the way, there should be generally both ANCOM crop care and also NILEX with the higher prices, we should be experiencing higher revenue. Yeah.
Okay. Do you have any follow-up question, Randy?
Yeah, a lot actually, a lot of questions with regards to ANCOM crop care, which is good actually because it's the star of ANCOM, right? So I think this is a very regular question. I even have this question being mailed to me as well. I guess a lot of people are wondering, like, from a competitive point of view, what's your competitive advantage from your competitors, say the other listed company in Malaysia, right? Like, for instance, Hexstar or something like that. Yeah.
Okay, competitive advantage. As we mentioned in the slides a few times, the key competitive advantage, or not only Hexstar, I mean generally on compared to a lot of other players in the region, is that we are the only molecule synthesizer in the region for herbicides. So that's a huge advantage because in our manufacturing field of herbicide, the margin is much higher for manufacturer compared to any formulators. By formulators, I mean the players are usually the industrial player that they will buy the active ingredient from China or elsewhere in the world, do the mixing. We are also a formulator, so we formulate in crop care. Our revenue in terms of formulation is much smaller compared to our active ingredient. So our competitive advantage is that we are synthesizer, the only synthesizer here, and also the product that we're involved in, for example, MSMA, there are only 2 producers in the world. So this is very important competitive advantage because not easy for other people to come in due to registration requirement. For Diron, there are only 6 to 7 players in the world. And for Monex, for example, we are the only player in the world. And for some of the timber preservative product, there are about 3 to 4 players. And for example, a timber preservative product, we command 45% of the world market share. So not easy for other people to come in because of the complication of setting up the plants and the registration process. So these are our key competitive advantage compared to a lot of other players. Now you mentioned Hexstar. Hexstar is a well-respected player in Malaysia, and Hexstar is very strong in the downstream distribution in the region. So I think everybody has got their own competitive advantage. For us, we remain very strong in the core competency of producing the active ingredient. So that remains our key competitive advantage. Yeah.
Okay. Thanks, Mr. Lee. I think we would like to touch a little bit about your factory expansion. Let me just, I saw a question, 1 second. Yes, so I think that's a good question. So, can you just update us? Sorry. So I think a lot of people are wondering also that from the presentation slides from Andrew just now, both of your factories are actually not at 100% utilization, and therefore, like, why would you like to expand, right? Is this kind of like on the backdrop of a strong demand of your products, right? So that's perhaps question number one, and basically over here it's saying like, can your sales team cope with the expansion when it's up and running?
I certainly hope so. Okay, now 50% and 70% relates to our current production of the existing active ingredient and also our existing formulation plant. All these are relating to our existing product, only for AIs. Our new extension in Port Klang factory is to cater for the new active ingredient. So basically, these are two mutually exclusive, right? So 70%, why are we not serving at the 100%? Now, in our industry, it's very important. In any given year, assuming if there is a huge surge in demand for the pesticide, it is important that we keep some reserve capacity to cater for the sudden surge in the requirement in certain given years. For example, in 2013, when sugar price was very high, there was a huge demand that we were producing about 80%, and subsequently, even at 100% level, we were not able to supply the MSMA to the Brazilian market. So then we lost the opportunity. So it's always important in our industry relating to the agricultural support for the administration of pesticide. It's important that we keep certain reserve margin. It's like electricity for tenaga. They will always keep a 20% to 30% reserve margin just in case there's a shutdown or there is a blackout from certain power plant in Malaysia. So we cannot go for 100% capacity. I know in Malaysia now a lot of glove factory are going for 120%. But for our industry, it's very difficult because certain product like MSMA, there are only two producers in the world. If there is a bumper year, good year coming along, and we cannot produce that year, it will be forever gone because the good years may never repeat the following year. So hence the reason for the 70% for our active ingredient. We're quite comfortable with the reserve margin. The 50% is applicable to our formulation plant. So formulation usually sometimes it goes 70%, sometimes 50%. For the same reason, we are looking at keeping it at 70% level. Yeah. So that's the reason for this. And the new factory to cater for the new active ingredient, I certainly hope that our sales team can cope because technically these new active ingredients are at the request of the customers from Brazil or from worldwide. For one reason, they do not want to depend fully on China. Now, China used to be is still the biggest manufacturing producer for a lot of active ingredients, but overly depend on China. In the last few years, experience has taught us that overly dependent may have an issue when they have policy changes or if they got big accident, big explosion in the plant and all that, the entire province will shut down. So due to that, I think that's our competitive advantage. Really, it's the customers who ask us to grow to manufacture the new molecule instead of us building it and go and ask customers to buy. So that is a very important part of our our growth expansion plan.
So you would say that you have quite a good order visibility on your new active ingredients, lah.
Generally, yes. Of course, we have to produce to the quality they wanted. It is not a simple process. To synthesize the molecule, it is a complicated chemical reaction process. So always for new molecules, new active ingredient, it will take a while for the team to get adjusted to it. So the challenge is more on the production part. It is not so much of the marketing part. Because market, they're always looking for diversification from China since 3 years ago. So actually, when we announced this new plan to do these 3 or 4 molecules, a lot of our customers, they're quite happy with this option that they're able to source it outside China.
Okay, I guess, yeah, I'm also seeing a lot of questions for people wanting to understand more about your raw materials. Like, what are your raw materials in ANCOM Crop Care that you're getting the supply from China, and how just now you mentioned something to do with how you're trying to be less reliant on China due to some sort of like inconsistencies from your China supplier, right?
Yeah.
So, and I think you mentioned also how you guys are trying to develop your own formula for the raw material. So I guess the question is, do you guys have the technical capacity and capability to do it?
Well, certain chemical intermediate, unfortunately for Malaysia, we do not have this capability because in order to produce a lot of intermediate chemicals that is used, now all these chemicals are basically a derivative of petrochemical product or the minerals from every part, mostly from China because China has got a huge mineral mining activities. So all these form the basis of the chemical raw material, and it's important when all these chemical plants do this product, they have got the economies of skills, and that's the reason why China has got a huge one. Now, for us, when we do this product, we are looking at getting the support of intermediate from China. Not everything we can do it here, but apart from China, now we are also sourcing from India, from Morocco, from certain places in Namibia, from all the mining activities place. So we are diversifying certain minerals and certain chemical from China, but not everything we can diversify away from China. That's the reality. So in Malaysia, to do the chemical intermediate is very difficult because we do not have a lot of chemical plants surrounding Malaysian region. So that is unfortunately the case. But going forward, I mean, generally everybody is practicing the diversification of China. So generally, I think from the last 3 years, there has been a lot of diversification activities that took place with a lot of formulators and a lot of industrial players in this region. Everybody is doing the same thing to reduce the dependence there. Yeah. And also over the years, I think China, in terms of the land cost, because a lot of all these plants are at the eastern coast of China, so the labor cost compared to 20 years ago, China has got the lowest labor cost in the region. But at today's rate, China is actually having higher utility, higher labor, and higher land cost compared to Southeast Asia. Hence, you will see a lot of relocation of a lot of Chinese factories by the MNC to this Southeast Asian region. Vietnam, Indonesia, Thailand, Myanmar. Myanmar due to the recent coup d'état, so it's been difficult. But in the region, there are a lot of FDI flowing into this region due to the less competitive state of China, given the growth in the past 20 years. Okay.
I think there's a question here, Mr. Lee. They want to find out about your R&D team and perhaps your R&D expenses.
Okay. In the US, a lot of MNCs allocate about 3 to 4% for R&D. In our case, it is much lesser. Now, in our industry, to produce one new molecule, it involves a lot of scientists. There's a huge cost attached to the new molecule, a new active ingredient. So our research team, generally, we do a lot of cocktail, a lot of mixing, and do the new product through the mixing. But to produce the new molecule, totally new molecule, patented molecule, we are not capable of doing that. But once all these molecules becomes off patent, I think then there are opportunities for other players to come in, including us, and through our economies of scale and also our specific demand from client, then we do this a bit of R&D for the new product with the help and collaboration, technical collaboration from mostly China engineer. So for R&D, we are not like those big companies like Monsanto, Dow, DuPont, BASF, Sumitomo. All those companies has got hundreds of scientists doing the new molecule, which Malaysian company, or for the matter, Southeast Asian companies are not capable of doing. But what we do is when certain products becomes off patent, and because of certain competitive advantage we have, we choose to do at this region. That's what we do usually. So our staff, R&D, maybe lab skills, I think we've got about 20 people like that. So, but this is important competitive advantage because in order to synthesize new molecules for the new player in this region to come in, they need to set up the lab, the equipment, the experience from the manufacturing, the experience from the production, and also all the necessary technical requirement. All that requires a long years of experience. So it's not easy to become a synthesizer or molecule, generally speaking. Yeah. Okay.
Mingtek, you got any questions on ANCOM crop care anymore?
How's the progress of the new factory? Because I forgot, has it been delayed? Last year, I forgot when the target completion.
Okay. As per the presentation just now, we're supposed to complete it by mid this year based on last year's plan. But during the pandemic, construction sector, I think everything closed down. When we applied to the, for two reasons, the delay was attributable to two reasons. One is, I think a lot of government office also closed down or minimize, cut short the working hours. So for us to submit the plan and all that, I think there's been corresponding delay in terms of approving the plan. And secondly, the plant also requires the input and participation from engineers from China. So engineers from China still, I think, remotely through the FB is a bit difficult because they need to observe the site and all that. So we are having a bit of delay attributable mainly to these two reasons. So now the new targeted date to complete the construction of the factories will be either September or December in between this period. And after we finish, we need to install the equipment for the new product. So that is likely to take place maybe beginning of next year. So all these are due to the mostly due to the pandemic because construction activities are reduced significantly and also the approval process is taking longer than expected. So otherwise, end of this year, and we hope to be able to produce by beginning first quarter next year.
The target for the max capacity will be about, I don't know how many tons, but I know in terms of number revenue, it's about 100 million, right? 4,000.
4,000 metric ton, yeah. Now, interesting part about this new molecule is this. As we go along, whatever we produce, the MSMA, Diron, those are the old active ingredient, or in the industry, we keep calling it molecules. Going forward, the new active ingredients, the prices per unit per kilo is on the rise. For example, at the moment, we sell MSMA at about 3,000 plus per ton, 3,000 plus USD per ton. Diron is about now is about 4,000 plus per ton. Monex is about 4,000 per ton. But the new, let's say B, the page right just now there's a page 3 category B, the first product we have launched maybe third quarter this year. The per unit per ton is about 12,000 USD. So the T is about 18,000 USD. So generally, all these new products will have 4 to 5 times the price of the old active ingredient because the AI is getting better and better. Is getting higher and higher concentrate due to technology. So that's why all this is on the rise. So that will contribute significantly to the growth of our future revenue if it comes on board. Generally, it is like that.
So when it's fully utilized, you expect the new factory to bring in about 100 million revenue, right? Just how I see the projection.
Well, without going too detailed, generally speaking, 4 molecules gave us close to, together with the formulation, gave us historically last year's audited result close to 300 million revenue. 8 molecules, the general rule is in the beginning period is lesser volume, but the per unit price is higher. So we hope to be able to double it in 24 to 36 months in terms of revenue. Generally speaking, we hope to be able to, depending on the market condition and also depending on our ability to do the technology fast, to do the production acceptable to the client fast. But generally, with 8 molecules, 8 active ingredients, it generally should double compared to the current level. Yeah.
The entire crop care revenue.
Yeah, crop care division, yes. Crop care division.
Of course, maybe profit margin may change a bit, like you said, new one, maybe.
It will be on a gradual rise. It's impossible to achieve a first round beginning at a higher margin, but generally, over time, the margin will increase and also the volume will increase. That's the general trend. So we hope to be able to achieve good economies of scale in 36 months.
Okay.
Yeah, maybe just one last question, with regards to ANCOM crop care, right? I think there are some questions here. What would your strategy be for 2021 for ANCOM crop care, and what are the challenges in 2021? Because I think, as you mentioned just now, ANCOM crop care is very, very kind of like it's very sensitive to natural disaster, right? Which seem like it's getting more and more regular these days due to like global warming and things like that.
Okay. That's a fair question. Okay, answer your first question first. what are the challenges and what are the plans for 2021 or 2022. Our financial year ends May 31st every year, from June to May. So now by March, I think we are finishing financial year 2021 in 2 months' time, generally speaking, and our new financial year will start in June. This year, generally, we are seeing recovery. We hope the recovery will continue. And this year, there aren't any natural disaster, too much of it. So I think we are experiencing generally a good year. So we hope to be able to continue the good trend. The challenges this year in particular is relating to our distribution and freight costs. It's applicable to a lot of players in the industry. For January, February, March, April, we are experiencing, April at the moment is still high. The highest went, like for example, the distribution cost went up 400%. By March, I think it's still at 300%. We hope these distribution costs, these freight costs will resume back to the normal level going forward, maybe close to the original level by May. So that will be the challenges that we hope to be able to maintain. And for generally, for the group, we hope the rise in prices will not dip, because when there's a dip in prices, that will be the other way in terms of the benefit, in terms of recognizing the business opportunities. So that's a general trend, a general outlook in 2021, and also the challenges. Now, coming to the question on the natural disaster due to global warming, yes, every time when there is a El Nino, La Nina, El Nino, it is not good, because it will cause floods, it will cause extreme drought in certain places. So in our industry, as we mentioned, flood is no good, bushfire is no good, drought is no good. So generally with global warming, all these are part of the natural phenomenon that we see in the world of plantation. These are the common challenges we face. However, generally speaking, whatever it is, if this year you have a bad year, next year should have a good year, because everything will have to be recovered. Because we are dealing with food industries, the shortage of the current year should be sufficed by the surplus or additional demand in the following year, or extreme high supply this year will lead to lower demand. But what we do is, over time, if you plot the graph over the projected time of tenure of 10 years, generally when you average it out, the basic demand will always be there. So the ups and downs usually should not exceed 20%, generally speaking. It's not like a pandemic. Sensitive to the pandemic will be the hotel, the F&B, the airline industry. All these will be affected at 80-90%. In our industry, in agrichemical, generally, maximum fluctuation is perhaps 20%, generally speaking. So with the natural disaster, 1 year should be recovered or compensated by the following years in terms of demand supply. Yeah. So that is the general trend of the industry. Yeah.
Mingte, you got any other questions for ANCOM Crop Care, or we move on to Nilex?
Let's move on to Nilex.
Okay. Yeah.
Okay, so I think maybe I start off the question on Nilex with, I guess it might seem like a relatively stupid, and I mean it might seem like a relatively basic question, but generally speaking, from the past few years and few quarters, oil price is positively correlated to Nilex's financial performance, right? So, but how does actually oil price impact Nilex's business?
Well, generally, why is it that the oil price has got a positive correlation, somewhat, I think 70-80% to Nilex businesses? Now, Nilex got two part of businesses. One is manufacturing, which is less sensitive to the oil price. As mentioned, manufacturing, sometimes with the fluctuation of oil price, we should be able to pass back some level of cost to the customers, generally speaking, for manufacturing. But for trading, it's a bit difficult. Now, Nilex is a trader in solvents in Malaysia, for example, like methanol is one of the key products that Nilex trades. So when the price is on the downward trending, because we are the stockists, we are the traders, so the general rule is buy low, sell high. But because we are traders, we've got time farm, we keep the product. So it is on the downward trending trend. So the chances of buy low and sell high is lesser. But if it is upward trending, on the other hand, the chances of buy low, sell high is highest. That's why, generally speaking, when the price is on the downward trending, NILEX result did not perform too well. In the historical performance, when the oil price is on the upward trending, that's why for the traders like NILEX, and for the matter for a lot of traders in the industrial chemical industry, they will be able to experience better margin due to the upward pricing. So that's how the positive correlation between the oil price and NILEX trading businesses is.
Not much question, but has the Q2 result reflected this in the NILEX?
Generally speaking, yes, if you take a look at NILEX result, compared to the last 2 years, NILEX is on the recovery trend. Based on the public announcement we have made so far for the Q1 and Q2, NILEX is on the upward trend. Yeah, yes. So capture some part of this, yes. As you can see, the oil price rise is not overnight or not due to last 1-2 months. It's on a constant rise. So the lowest at one point, if you remember, I think about a year plus ago, somebody need to pay to take the oil, pay you to take the oil, because there's not enough storage and all that, and a lot of ships are stuck with a lot of this oil. So from then, it has been on the general recovery trend. So now, for example, the oil price is about 67, 70. Methanol prices, NILEX main trading product, the lowest of methanol prices was at 180 USD to 200 USD per metric ton. It was about a year ago, or about 9 months ago. Now it is trading about 300 plus. So generally, yes, there is a positive correlation between oil prices, generally speaking. It is not only oil prices, it's also a function of demand and supply. Right? So these two things, demand, supply, and also the oil prices. But as I mentioned to you, 70% to 80% positive correlation based on historical performances of NILEX. Yeah.
So even if the oil price remain the same, as long as it doesn't go downtrend, by right NILEX should be profitable, right?
Generally, that is the observation. Yes. Yeah.
Because I see it is a profitable segment, just that in 2019, because oil price start to drop, and then 2020 the super worst drop. That's why those otherwise
for two reasons. Yeah. Correct, for two reasons. One is the prices is on the downward trending, and second is because of the pandemic. When there's a pandemic, there will be lesser industrial chemical requirements. Now, when the economy is doing well, the industrial general industry will be doing well following the better economy. When there was a pandemic, the demand for a lot of product has come down. Hence, it is due to price and also the demand for the last 2 years. So that's a reason for the lower performances of the trading division. Yeah.
Okay. So yeah, I don't have any more question on NILEX. Rondi, if you have, you can ask.
Yeah, I mean, so on the methanol, how has the demand been in Malaysia right now, Mr. Lee?
Generally, we are seeing a recovery of better demand, and definitely the recovery of prices has already taken place from the low of 120 to 200 per metric ton USD to the current level of 350 to 380. So we already seen the price recovery. The demand recovery also, we are seeing the gradual increase in terms of demand. Generally, I think a lot of industries still got to go on. So we are seeing the recovery also in terms of demand, generally speaking.
Okay, so I guess I would like to move on to ethanol, because that's a very sexy business right now. I understand that on your ethanol manufacturing, it's done via a subsidiary called FermPro. And
Yes.
how does this constitute to your overall industrial chemical segment, actually, like in terms of top line and bottom line?
Well, in terms of top line, it's not significant because trading division contributes to 800 million revenue. Contribution from the ethanol production every month, I think we produce about 415,000 liters or 500,000 liters. So general revenue a year is about 30 plus to 40. So that is very small compared to the revenue of the trading division. However, ethanol during the pandemic, ethanol price shot up a lot due to the requirement of sanitizer, due to the requirement of all these cleaning agent. So ethanol prices go up. So do not mix ethanol with methanol. there's a huge difference. Ethanol can be consumed, methanol cannot be consumed. If you remember, I think about 2 years ago, there was a group of Myanmar. I think a lot of Myanmar, they mix, they pre-mix ethanol with methanol. I think there were 27 or 28 deaths recorded 2 years ago. It's because of mixing the wrong product. So ethanol is for the consumption of food grade and also for the industrial use. Methanol is more for the industrial chemical use. So these two. So specifically referring to the ethanol, yes, I think for the last 1 year we experienced good profitability because of the higher price and because of the shortages of the ethanol. So in terms of profitability contribution, revenue, I told you already, profitability contribution, ethanol, I think the plant produced, with the amount we produce, generally speaking, I think we do about 8 to 10 million profitability for last 1 year, this financial year, because of the high price of ethanol, generally speaking. So that forms a very important part of the profit contribution for Nilex.
And can you give us some light on the current ethanol price? Like, how is it like? I think I read somewhere and I understand that Malaysian ethanol price could be different than those ethanol price in other markets, right? Is that true?
Correct. Yeah. Now, Malaysia, we do have a lot of people producing ethanol. One of the biggest ethanol producer in the region is Thailand. They produce ethanol from sugarcane. They also produce ethanol from cassava, right? So for Thailand, because of the economy of scale, they can produce very competitive ethanol product. In Malaysia, to import ethanol, there's always a tariff because there are only two producers in Malaysia. So the general price for ethanol is for non-food grade is about 5-6 ringgit per liter. For food grade, which is 99.99%, for food grade, for drinking purposes and all that, it is not possible to have high impurity. So it needs to be 99.99%. That's about 8 ringgit. So that's general price of ethanol for the local consumption and for the price comparison here. But for Thailand, usually they are more competitive because they produce huge amount of ethanol, generally speaking.
And what about the price trend right now for ethanol? Because I mean, as you know, a lot of hand sanitizers price are also has kind of like half or even like more than 50% discount than last year.
This is a business situation. Whenever there is a shortages, everybody just buy a lot of quantity, and when there's oversupply, and then they will throw the prices and all that. But generally, our ethanol use in sanitation is one very small part. Most of the ethanol are used for industrial purposes, like doing the FMCG, doing the soap, doing the industrial processes and all that. So really, the sanitizer is the small part of the ethanol usage, generally speaking. Yeah. So, but because of the shortage, because of the situation of no more shortages, the prices is not like last time. I think during the pandemic peak, I think some are selling even 12 ringgit per liter and all that. Yeah. So now there's no such prices. I think generally it resumed back to the original. But for the additional capacity that we're about to build, Malaysia generally with another player in Malaysia, we produce perhaps at the moment about 10-12 million liters. I think Malaysia also import another 10-12 million liters, right, for usage. So with the additional capacity, there is always room for the Malaysian companies to rely lesser on the neighboring country or on the import of ethanol. Yeah.
Okay, there is a question here, right? I think you might want to answer this. How does the global ethanol policy affect the group's business, knowing sugarcane hold a sizable position in your company's portfolio?
Yes, that's a good question. Global ethanol. Now, ethanol has got some correlation with sugar prices. Now, for example, Brazil is the biggest sugar producer in the world. In Brazil, half the sugar are used for food consumption basis, and the other half is used for car. Basically, a biofuel car. So Brazil has already used their sugar cane produced ethanol to use for the diesel purposes, right? So it all depends. Generally speaking, it's always striking a balance. When the sugar price is high, like at the moment, sugar price is high, the ethanol usage is lesser because you cannot compete with the international price of sugar. When sugar price is low, there will be more usage for ethanol because they have to strike an equilibrium there. But generally speaking, ours is more sensitive to sugar. Ethanol is lesser, generally speaking, for the business that we are in, sugarcane. When we sell pesticide, we hope to have the high price for sugarcane for our pesticide product. For our manufacturing under NILEX, the ethanol, we hope to have a high ethanol prices. So we have got different businesses that requires the different pricing strategy. So that's how it generally affects our business model. In a way, I think we have got a natural hedge. When the ethanol prices is doing well, then Pro or NILEX will be doing well. When the sugar prices is doing well, then our pesticide will be doing well. Generally, we have got a natural hedge. Yeah.
Okay, and I think finally there is a follow-up question here from, again, Sharon. He asks, how does RCEP place in the company's outlook?
RCEP is the new situation, new collaboration here. We are still observing the condition of all this RCEP, but generally speaking, for all the APEC, last time we used to have APEC, we're still having the APEC. RCEP is basically the I think Australia, Mexico, and also India, Malaysia, and China, all that. So all these Asia Pacific related countries, if we are having positive tariff, zero tariff on all these regions, that will make it very, very good for our product compared to certain competitors not within the RCEP. All right. So I think we are still observing because it is a new thing that just established. So we are still observing the condition of this. But usually for all these RCEP related countries, if we have a business with them, that would be good because for non-RCEP, they will have maybe not so good tariff or not so good import duty per se. But for this is still very new, something that we are still observing to see the benefit of it. Yeah.
Okay, Mr. Lee, it's already 10 o'clock, so maybe, yeah, maybe we'll just, if you don't mind, we can extend for another 10-15 minutes. Maybe we just touch a little bit on your financials and maybe ANCOM logistics.
Yeah.
Yeah, Mingtek, you wanna ask anything on those two things?
Yeah, I'll ask the elephant in the room. How's progress RTO? If it's convenient, it's fine to share.
Well, generally speaking, I think as announced, we have signed a HOA. Of course, actions are being undertaken to complete the transactions, and we have done a lot of the due diligence, a long process, and also the continuation of negotiation and discussion with the target companies. We cannot divulge too details, but generally we are working to complete the transaction as announced before. So it is in progress.
Okay.
Yeah, I think there's a recent article. I'm not sure whether it was last weekend or something like that, where the S5 person, he was talking about how it is nearing its end, if I'm not mistaken, right? Yeah.
Well, yeah, it is an ANCOM session. S5 or the article talk about IRIS. If I read it also, I mean, we are not here to comment about other companies, generally speaking, but definitely we are working hard to complete the transaction, and we are working towards a submission. But of course, like any other business, always due diligence process sometimes takes longer than expected, and negotiation also sometimes take longer than expected. But generally, we are working towards the completion. That's what we are working on.
Okay. So I think the sorry, Mr. Lee, I'm going to keep pushing on this question, but as an ANCOM investor, perhaps maybe you can run us through on how, as an ANCOM investor, we might be able to benefit from the S5 RTO. Maybe can you shed us some light on perhaps how many shares at the group level does ANCOM has in ANCOM Logistic Berhad? And is there any plan for you to stay invested or to cash out, or like what's the big plan?
Okay, the second part of the question I can answer first, but first part a bit difficult because how does that impact the detailed calculation? would entail a lot of negotiation information, so that I cannot divulge. If I talk a bit more about it, I think people can work out the details. So that's very dangerous, and we are guided by Bursa rules not to talk too details about all these numbers. But the second part of the question is how does ANCOM's shareholders benefit from this? Now, generally, we are on the consolidation process. Basically, we are consolidating our chemical businesses. We are disposing the non-core business to refocus back on the core business. As a result of that, we have a one listed company available for any injection. So it so happened that I think S5 is the companies after negotiation, after deliberation, we think it's quite suitable for injection because of their historical track record and all that, and they've got a lot of capability. After our due diligence, we found that they've got a lot of capability to do a lot of IT related work. So after injection, ANCOM is able to participate in this IT business, not in the subsidiary because RTO means we'll lose the controlling stake, but we are able to benefit from the growth from S5 going forward if the deal is to be completed as a minority shareholder, just like the media when we dispose of the majority stake. So not in the controlling manner, but if S5 is doing well, all ANCOM shareholder also will benefit from the performance of the new business in the smaller stake. As to how small stake, I think that depends on the final negotiation, final announcement, so that I can difficult for me to comment anything. So generally, we can benefit from the IT. If they are doing well, we can benefit from the smaller portion of it. But going forward, generally speaking, we are focusing on our core competency. That is chemical-related businesses, industrial chemical, and also agrichemical.
Okay.
Okay.
Any
question? Moving to the running question. That's my final question.
Okay, I guess just last two questions from me, Mr. Lee. On your financials, I mean, we are seeing that you have been kind of like paring down your debt, which is very good. But can you sort of like guide us about your prospects in 2022? I would say, right, because this current calendar year is going to end in May. So what are your future prospects in 2022? What are your kind of like your KPI, any targets kind of thing in terms of your balance sheet numbers and your P&L numbers?
Okay, right. Thank you for the questions. Now, without divulging too detailed the numbers, general outlook for 2021-22, going forward, we are very determined to continue to reduce the corporate cost and also reduce the debt, and hence the corporate cost. We are very determined to continue to nurture the smaller business. If really cannot, I think we are determined to close down the loss-making business. Three, we are very, very focused on the chemical growth going forward. As can be seen from the plan, we expanded the plant. We are actually quite excited about the new plant and new active ingredients. So going forward, 2022, we'll be focusing on agrichemical, AI, and expansion of the portfolio. And for Nylex, also, we are hoping and we are working towards the recovery of the industry, hence a better result. So basically, that sums up the general outlook for us going forward in the next year. And we are hopeful that the recovery will remain, and also we are able to execute as soon as possible the completion of the plant plus the installation of equipment for the new active ingredient, and also the debt reduction, consistent debt reduction program that we embarked on 2 years ago. And relating to this, maybe a lot of shareholders will be asking this question also: what is the dividend policy? And in the past few sessions, and also in a lot of engagement with the shareholders and IR, we are determined to pare down the debt. As a result of that, I think dividend policy in the shorter term may not be there, but we are concentrating in consolidation and also in making sure that the group has got better balance sheets, lesser borrowing, and better cash flow going forward for the expansion. So that's how we are going forward in the next 12 to 24 months.
Okay, thanks for that, Mr. Lee. I guess just one final question before we wrap things up. Yeah, I think this is sort of like my final question to a lot of companies that comes onto the live session. I think because in any investment, one of the most kind of like important aspect and the greatest asset or liability of any company is not really in the balance sheet, but it's actually in the boardroom. It's leadership. And from the first time that I think Ming Tek and myself, we met you last year, we have definitely seen the transformation of ANCOM. I think during that time, a lot of things were really down. Nylex was down heavily. ANCOM was really in bad shape. It was a down cycle. And, I think from what we can see from the financials, especially in the past 2 quarters, you have actually managed to turn it around. You sort of pad out the debts, you kind of like consolidate all the good assets together and kind of like sell off the all the other kind of like more negative ones, I suppose. So perhaps, maybe you can tell us a little bit more about yourself. Like, what is your leadership style? How is the ANCOM team in general? Are you more motivated now than ever? And, what would keep you awake at night?
Well, personal management style, generally speaking, I think, as you mentioned, rightly mentioned before, I think the group has got a well-diversified background, a board of directors that give a lot of support and confidence. And it's very important for the board of directors to have a confidence in the management. And at the moment, I mean, for now, we work very well together with the board of directors to chart a new direction for the company. And in terms of style, personal style, now, I like to always talk about a few attributes that is very important in building a business. Number one, we always must be focused on what we do, focus on the core businesses, focus on the core competency in whatever things we do. For the smaller businesses that has got potential, we also will nurture and then we will assign the rightful personnel and rightful talent to it. But generally, our core competency is in chemical related, whether it's agrichemical, industrial chemical. That's where we will continue to grow our core competency. Two is to have passion, personal style. Really, I like to work with people with a lot of passion, work with the management team that's got a lot of initiative and passion, and that's important. And that is the underlying factors pinning the growth story of the ANCOM crop care. As you can see from the financial numbers for the last few years, is supported by a very, very strong and profitable, talented management team under the crop care division. So I like to look for teams that's got a lot of passion. So the style, open, we are very focused and we like to have work with people with passion. And going forward, the interest and also the trust placed by the board of directors and shareholder is always our guiding principles in making sure that we always want to deliver better returns for the shareholder. So that is the few things that I always think of when I remind myself to be because we are actually managing a public asset, so we have to be very, very focused and disciplined, and hence also the debt reduction program. We are very, very disciplined and focused on that. Yeah. So a bit about the management style. Yeah. Okay. Yeah.
All right. I think with that, perhaps we can wrap things up. Ming Tek, you wanna maybe Ming Tek and Mr. Lee, if you guys have any last words, you can just deliver them.
I don't have much last words, but I can see that for those that are listening, I can see that the company promised to do many things last year, and most of it they have already delivered. And I was thinking to invest, and after that, got lost in other counters, and you bet, wow, I won something already. So, and maybe I want to ask Mr. Lee one last question. Then after that, after Mr. Lee, you answer this question, you can, give a summary of what people want to remember about your company. So this last question will be on what are the things that are making you worry about this business?
Making me worry about this business. Well, there are a lot of things. I mean, like any other businesses, there are a lot of challenges. We are facing, for example, at the moment, freight cost is a huge trouble for us because that will reduce competitiveness and that will give us a lot of issues with the margin and all that. So we're going to find a lot of ways to solve. General business going forward, my worry is every morning I wake up, I hope not to see natural disaster. All right, that is it. Because every time when I see bushfire, I will start sweating, even though the heat, I can feel the heat of Malaysia because because when I see bushfire, then the business will be affected. So generally speaking, what worries me, no natural disaster, recovery is there, no low cycle of the petrochemical to the level that is so difficult, and also so these are the general worries I have. But otherwise, I think in terms of competitive advantage is more important. We are in the business, unique business, and I would like to see ANCOM's industrial chemical and also agrichemical. We are the very very much integrated chemical players in this Southeast Asian region in both agrichemical and also industrial chemicals. With the revenue of $1 billion plus at the height of 2 billion, I think it's something that we take pride, and it's something that we wanted to use that to grow further in the region. So these are the looking forward, and also some of the worries I have. Yeah. And also, I think in terms of pandemic, we hope the pandemic can recover soon, because pandemic is affecting business all around. I mean, in terms we already seen some recovery. So hopefully vaccination can take place and can overcome all these problems. And also we hope that this pandemic will be over. Then the heydays will come back again. So pandemic, for example, pandemic in certain region like for China, they are better managed. But in terms of having them to come here, it's not possible, because that will delay a lot of work. So generally speaking, my worry also, I hope the pandemic will recover soon, so that all businesses can recover concurrently. Yeah.
Thank you, Mr. Lee.
Thank you very much. All right. So no more final question.
Thank you, everybody.
Okay, thank you everyone for staying all the way to the end. I think I personally enjoyed this session. Very informative as usual, Mr. Lee. So with that, we will be ending this session. Have a good evening, everyone. Bye bye. All the best.
Mr. Lee, just
England. Yeah.
Mr. Lee, just hold on. I mean, I'm going to end the broadcast, but just stay back for a little while, Mr. Lee.
Okay, yeah. Thank you.
All right. Thank you, everybody, for tuning in. Good night.
Andrew.